Hedging through futures. Next. Shh. Stop talking. This area again is very regularly asked in the examination. Once introduction is over, not difficult. It becomes very simple. Problems can be moving very fast. Okay, please. Shh. Okay. So long we have been screaming futures. They have taken at least 5th class today. We are dealing with what? The chapter futures. All aspects which I am discussing. Are you all to some extent following or not? Yes or no? Please. Shh. Even if you don't follow, I have given elaborate notes. If you go home, think calmly what is happening. Very simple, nothing great, simple common sense issues only has been discussed in this chapter till now. Same thing will continue also. Okay, now please. With this last leg, I'll be completing this chapter, futures. Okay, now stop talking. In the first class, not on futures, of SFM, okay, we discussed that in any market there are 3 players. How many players here? 3 players. Name the 3 players. Speculators, arbiters, and then hedgers. The 3 players: speculators, arbiters, and then what? Hedgers. Now, speculator always takes a position in one market. Takes what? Position in one market. Trying to make a profit, also takes a risk of having what? Loss. By forecasting price or guessing prices. Everybody, yes or no? No. Very simple. A person simply goes for futures buy or what? Futures sell. Very simple. Yeah? I go for a TCS futures buy at 2,200. Listen, March TCS futures buy, I go for 2,200. Just old basic. What is the meaning of that? I have agreed to buy TCS shares at how much the base? 2,200 on March 26. Yes or no? When I take this position alone, it means that I am betting that on the day, March 26, the TCS share will close more than 2,200. See, speculator. Let us see examples. Speculator is a person who takes position in one market. Only what? One market. Now, I give a TCS buy. March, say TCS futures buy at 2,200. Answer me. What I am doing? I have agreed to buy a TCS share at 2,200 rupees on March 26. That means, what is my thought here? I believe that on March 26, the TCS will close more than what? 2,200. Where the exchange will give me what? Counter sell at 2,300 or 400. Book a profit and come out. Yes or no? That is what a person taking a buy portion expect. Yes or no? Now, should they close at 2,300? No. Even close at what? 1,900. What profit I have a chance to make? I also have one equal chance of making what? Loss also. I am said to be a speculator. Yes or no? Where I can make a profit as well as what? Loss. But taking a position in an independent single market. Yes or no? Now, in this case, I don't go to a cash market at all. But other 2 persons, namely what? Arbitrators, hedgers, will always have their legs in 2 markets. One in what? Cash, another in what? Futures market. Now, why? Because arbitrage, we saw all the previous seminar. Now, what the arbitrage strategy? Spot sell, buy future. Or what? buy spot and then what? Sell futures. I do one transaction in spot, I do one transaction in what? Futures market. And by identifying the mispricing between what? Both the market, because the futures derives value only from what? Spot market only. By identifying the mispricing, I make what? A riskless profit called as what? Arbitrage profit. So to make an arbitrage profit, I cannot sit in one market and go for what? Two markets to make profit out of it, because it is the comparison between cash and futures market only creates an arbitrage. Yes or no? Because fair futures price does not come from future market, comes only from what? Spot market. Spot price into e power tx only gives you what? Fair futures price. Future is not created on heaven, it's only in what? Cash market asset. Are you following what I'm saying? In that case, when I want to be an arbitrage, I should take a position in what? Cash market and what? Futures market, like spot sell futures buy or spot buy futures sell and make a profit. Yes or no? Like that. Hedger is a person who has already taken a position in cash market. He is already what? Taken a position in cash market. To protect his position, he goes to futures market. Did you understand or not? Now, speculator takes position only in what? Futures market. Arbiter takes simultaneous position both in what? Cash market and futures market. Hedger is already taken what? Position in cash market. To protect his cash market value, he enters what? Futures market. That's the meaning of hedger. His aim is not to make a profit or not. His aim is to what? Ensure a stability, avoid a risk. What I'm saying? What hedging strategy? Risk reducing strategy. Everybody, are you following us? You understand or not? Now, let us see more detail what happens. Introduction is going to be again fairly long. Have patience to listen to it. Then we can just go for the problems in no time. Can I pose it up? Now, see. What happened is, a person has purchased a share today. Purchased what? A share today. He has purchased a TCS share. He might have purchased today or he might have been already holding it. Both are same only for me. Yes or no? No. So, a person is holding TCS shares. Is holding what? TCS shares. Has purchased share today. Now tell me, can he go to sleep peacefully? That night he'll be getting peaceful sleep, sleepless night. Why sleepless night? Because he is afraid. He is what? Afraid. What happens when the TCS company shares what? Falls. I'll be suffering loss in my will. I paid 2,000 rupees to buy a TCS share today and have in my demat account what? 2,000 rupees TCS share. But I'll be very afraid because tomorrow what happens? And TCS becomes what? 1,800. I'll be suffering loss. Yes or no? In one mind, I say it may become 2,500, make bumper profit. At the same time, I'm having a fear that that share price may fall. Yes or no? So now, this person is having a apprehension about the fall in share price. Yes or no? Now, another person, he is afraid because having TCS share now. He said, now I'm having TCS share now. Due to TCS share only, I don't have sleep. To get sleep, what I should do? Sell TCS share. The other person what? Sold the TCS share today. And how much rupees? 2,000 rupees. Can you go to night sleep peacefully? He is also a peaceless night because he feels that now he has sold at 2,000. Tomorrow becomes what? 5,000. Heart attack. Yes or no? No, because both you are a buyer or what? Seller. You will not have what? Peaceful night because tomorrow share price may increase, may decrease. It make you suffer. When you don't have peace, go to God. For us, God is what? Futures only. God is what? Futures. So, the futures market can give you what? Peace. So, take a position in the futures market, then the portfolio can be what? Hedged. It is what we call as hedging through futures. Everybody, are you following what I am saying? How it is done? Very simple. How it is done is what? Very simple. Now, see. There are two persons. Okay. Person who is having what? In cash market is what? Long. Long means what? Is having a buy position in cash market. The second person is what? In cash is what? Short. He has short sold a share in the cash market. So a person can have two positions in cash market. It is holding an asset what? Has sold an asset. It can be long in cash market or what? Short in cash market. Point number one. Accepted? Yes, now, if you have bought something today, tomorrow you are going to buy it or sell it? Sell it. I want a guaranteed buying price or selling price or selling price. So in futures market, I go for long futures or sell futures or sell futures because I am long on cash market. I am having an asset. I am afraid I want to what? Sell the asset tomorrow. A seller of asset tomorrow wants a guaranteed buying price or guaranteed selling price or guaranteed selling price. He wants to have a forward selling price or not. Futures is as good as what? Forward only. He goes for a forward sell. Yes or no? I have a TCS share today. What I want tomorrow? Forward selling price for TCS share. Yes or no? I sold a TCS share today. What I want? A forward buying price for TCS share. Everybody follow what I am saying? Now, that means a person is taking long position in what? Cash market. In futures market, will go what? Short. Will go short or will be selling in what? Futures market. In the price or not? Now, a person is what? Short in cash market. In futures, he'll go for what? Long. Now today I have sold, so tomorrow I have to what? Buy it. When I want to buy tomorrow, I don't want to keep it open. I want to what? Hedge it. I want what? A guaranteed buying price. Hence I go for what? A futures buy. Yes or no? Now, the futures long portion gives me a guaranteed buying price. A future sell gives me what? A guaranteed selling price. Accept or not? Now, in that case, when I already bought a share, I want a guaranteed selling price. Hence I go for what? Future sell. When I already sold a share, I want a guaranteed buying price tomorrow. I go for what? The long future strategy. Everybody understand or not? Very simple strategy. Yes or no? Now, when I buy foreign currency, I go for what? Forward sell. When I sell foreign currency, I go for what? Forward buy and so on. Like that, long portion in cash market, short in what? Future and vice versa. Any point number one? Put in the back. Now, next question is, how said this is going to what? Protect me. Question arises now. Now, let's take one by one. Yes, point A, point B. My strategy is long what? Cash market and what? Short what market here? Futures market. Other words, I have bought a share today. I am going to sell it in what? Futures market tomorrow. Now, let's see what is going to happen. Okay, now. I am having my legs in how many markets? What two markets here? Cash and then what? Futures market. Now, very simple. In cash market and futures market, two things can happen. Share price on which I am long may increase or may what? Decrease. Now, there can be two things here. Share price what? Share price increase and share price what? Decrease. Rumba simple. I have bought a share today at 100. Bought a share today at what? 100. After 2 months, the share price becomes 120. Because how much price is 120. When the share price increases in the cash market, I am happier, unhappier, happy. I make a gain or loss, gain. I make a gain in what? The cash market. Now, suppose the share price decreases. The share price what? Decreases. I bought the share at 100. After 2 months, the same share is selling how much rupees here? 80 rupees. I will cry or laugh? Cry. The share price what? Decrease. I'll make a gain or loss? Loss. Okay. So, that is why I'm afraid. That's a risk or not? What the risk here? I bought that share for some price today. Tomorrow the price can increase or the price can what? Decrease. Price increase, no problem, I'm happy. And afraid about what? The decrease in price can even have a loss. Yes or no? Now, either position, if I have a position only in cash market, yes or no? I am there only in cash market. The cash and future. Okay, now, in futures, when the cash market share price increases, futures price also will increase. And a futures market is a forward rate which goes along with what? The cash market. Now, in that case, the futures price also what? Increases. When the share price increases, when the underlying asset increases, the contract value also what? Increases. The future price increases. Accept that? Now, see. I have given what? I have given what? Future sell. I have given future sell. The exchange will close my portion by giving what? A future buy. By giving what? Buy. Yes or no? In that case, I sold at a higher, that is lower price. I am going to give a buy at what? Higher price. In futures, I will be booking a profit or loss. Loss. I am going to have a loss in this case. Now, suppose the share price decreases, the futures price also what? Decreases. Now, when the future price decreases, now I am holding what? Sell futures. Suppose my sell futures is for 150 rupees. How much is 150 rupees. Now, when I give the counter buy, I give it a higher price or lower price? Lower price. I will get profit or loss? Profit. Yes or no? That means when I have a gain in cash market, I will be having a loss in what? Futures market. When I have a loss in cash, I will be having what? Gain in futures market. It will be offsetting what? Each other, leaving a portfolio stable. Everybody, yes or no? This is what we call as what? The hedging through futures. So when I take an offsetting position in what? Futures market, I can leave a portfolio what? Stable. How the hedging should be done only in different angles we'll be discussing in this particular area. Everybody, are you following the hedging through futures or not? Now, suppose the other party, I don't want to dictate, vice versa I will tell you, but you tell me, long cash market and then, short cash market and long what? Futures. You sold in the stock exchange today, you took what? Yeah, buy position in futures market. Now, all of you, don't look at this. Independently tell me. I sold today. I sold what? Today. Tomorrow, the share price increases. Loss again, loss. And I sold today, I have to buy back at what? Higher price, loss. Yes or no? Now, I sold today, tomorrow share price what? Decreases. Gain or loss? Gain. I sold today, I buy back at what? Lower price, I have a gain. Yes or no? Now, this is becoming loss, this is becoming what? Gain. Now, come to this. Now, when the share price increases, future price also what? Increases. Now, tell me, in futures, long or short? Long. I have a buy futures. I have what? Buy futures. Now I give a counter sell future. How much price? Higher price. What will happen here? I'll be having a gain. I have a buy futures. I have what? Buy futures now. I give a counter sell at what? Higher price. I get what? Gain. I have a buy. I give a counter sell at what? Lower price. What am I going to have? A loss. This is loss, this is gain, this is gain, that is loss. Same thing will happen there also. Respond yes or no. So by just going taking a position in the futures market, I can hedge my what? Cash market portion also. This is what we can call it as what? Hedging through futures. First stage introduction over. Are you following us? Now, there is some more introduction left. I'll discuss and then give you notes and then start doing the problems. See, next. Now, I have purchased TCS shares. I have purchased what? TCS share. Long TCS in cash market. I have purchased TCS shares. What is my cash market position? Long TCS in cash market. It's or not? No. In futures market, I should go for buy or seller. In cash, I go for what? Long TCS. I purchase TCS shares in stock market. Futures, like I should sell futures, buy futures, sell futures. Sell Infosys futures. Sell Infosys future. Sell what future? TCS future, because the company in which I am taking a position in cash market, same contract, you go for what? Futures market, because the TCS share price in stock market only will be influencing what? The futures price. So if I am long on TCS shares, I will go for what? TCS short futures. Short on TCS shares means what? Long TCS future. So what asset I am having in cash market, for same asset only, I should go for what? The futures contract. Innapa, is or no? So I am having an Axis Bank share now. I go for what futures? Axis Bank futures. I have an SBA share. What futures? SBA future. So asset in which I am holding or selling, same as I should get what future, because that price will be correlated. Yes or no? Because for an Axis Bank share, if you go for what? TCS future, there's no correlation between an Axis Bank share price movement and TCS futures movement. Are you following what I'm saying? So I should always go for what? The same share and same contract. In the next point, everybody yes or no? Now the problem is, Axis Bank share has got the futures in futures market. Yes or no? TCS share has got what? TCS futures. Infosys share has got what? Infosys futures. I have bought MTH gas share. I bought what share here? MTH gas share. Tell me, is MTH gas share traded in futures market? Not at all. Not all the company shares listed in stock exchange is being traded in what? Futures exchange. There's some qualification for the exchange to allow a futures contract to be traded. Yes or no? So that means if I take a position on MTH share, I don't have a corresponding position in what? Futures market, because I searched the website, I could not find out MTH futures contract. Are you following us? Now question, no. In that case, how can I hedge? Question arises now. Question, the question is, sir, MTH gas I am having not. I am buying an MTH gas share. I have sleepless night. What happens when the share price falls? I have sold a share, then suddenly good admissions, share price can also what? Increase. Both ways, I said, recording happening. Can I say? In the case, MTH share can be bought as well as what? Sold. Both ways, I'm having what? Sleepless night. So I want the hedge in futures market. There's no futures. I didn't say I don't know futures. There's no what? Futures. For what? MTH car. So are you following what I'm saying? Now, in that case, Noun I am using, not verb. Can I say? Now, in that case, in that case, how can I hedge my MTS shared portion? Question arises now. What I will do is, I will hedge using Nifty futures. What futures? Nifty futures or index futures. I will follow what I am saying. The question may be asked, sir, what you are saying, it is wrong. MTS share price movement and Nifty movement may be different, yes or no? How the Sensex moves or the Nifty moves and how the MTS share price moves is what? Not correlated. How can I take a Nifty future to hedge what? MTS future, yes or no? I have a data called as beta, yes or no? Beta links the variation of what? Nifty and every share, yes or no? By using beta, I can hedge what? Hedge using the Nifty futures. Are you follow what I am saying? So whatever shares is not there in futures market, the option for him is what? Hedge using what? Index future. Index future, index and the share price may move differently. Then I can use what? Beta hedging. So beta 2 means what the meaning of? If the index moves by what? 1%, then the index share moves by what? 2%. Take an appropriate portion using beta, I'll be able to hedge fully. Everybody, are you following what I'm saying? Now, either we call what hedging? Index hedging or beta hedging. Everybody up to this, are you following what I am saying? Okay. Few more points I have to discuss, which I can discuss only with the help of the numbers later. We'll go further in the later stages. Up to this, everybody, can we have the notes in this regard or not? No. So, most of the issues needs to be discussed is already started to be discussed. Only problems are pending. Can I proceed? Now, write down. Hedging. What is the heading given? Hedging through futures. Now the AC switched on. 5 minutes. Point number 1. Point number 1. A person who has taken long position. I hope by this time you should be very much comfortable with the long and short. Get about a person who has taken long position in cash market. A person who has taken long position in cash market is afraid of. A person who has taken long position in cash market is afraid of what? Fall in prices. Is afraid of fall in prices. Is afraid of fall in prices. Now, I have purchased a share, it should not fall now. Is afraid of what? Fall in prices. And similarly, a person who has taken short position, and similarly, a person who has taken short position, in cash market, a person who has taken short position in cash market is afraid of what? Increase in prices. Is afraid of increase in prices. Is afraid of increase in prices. Point number 2. If they want to protect themselves, against price movement, they can hedge their cash market positions. They can hedge their cash market positions with the help of what market? Futures market. They can hedge their cash market positions with the help of futures market. They can hedge their cash market positions with the help of futures market. Everybody following the second point or not? Now, point number 3. Strategy, hedging strategy. Point number 3, right? Hedging strategy. Branch it into 2. Hedging strategy, branch it into 2. First branch, cash market long. First branch, cash market long. Can you fill out the blanks? Futures market short. cash market long, futures market short. Cash market long, futures market short. Now when I buy a share today, I want a agreed selling price. So futures market short. Futures na forward madudan. Can I was it? Now come to the next branch. Cash market short. I short sold today. Okay. Cash market short. Futures market long. Futures market long. Futures market long. Are you all following up to this or not? Next. Point number 4. Point number 4. Suppose a person is long in cash market. Suppose a person is long in cash market and short in futures market. Suppose a person is long in cash market and short in futures market. A person is long in cash market and short in futures market. Then his gain or loss profile. Then his gain or loss profile in both markets. His gain or loss profile in both markets will look as follows. His gain or loss profile in both markets will look as follows. Gain or loss profile in both markets will look as follows. Branch it into 2. He is having his leg in how many markets? 2 markets. First is what? Cash market. Second is futures market. Tell me what is the other name for cash market? Spot market is what we call as the cash market. Cash market. Second is what? Futures market. Please. Cash market, right? Share price increases. Cash market, right? Share price increases. All of you should think and tell me, he has bought a share today at a lower price, na? Share price what? Increase. And sell at a higher price or not? It will be making gain or loss? Gain. Write down gain. Share price increases, cash market gives him gain. Below that, share price decreases. Above that only is afraid. Yes or no? Share price decreases. He now bought at 100, it became 80. What happens here? Loss. He suffers a loss in his portfolio. The position is loss. Now, when share price increases, futures price also what? Increases. Futures price increases. Futures price increases. Futures price increases. Now, he is having a short futures not. Suppose he is having a short futures for 200. Future price becomes what? 300. They give a counter buy at lower price, a higher price, a higher price. What happens here? Loss. Future price increase is going to have a loss. Now short futures will be counter through what? Long futures at a higher price, loss. Future price decreases. Short futures close using what? Long futures at a lower price, that gives him what? Profit. That gives him profit. Can I proceed? Write down. It is vice versa. It is vice versa. It is vice versa for long futures and short cash. It is vice versa for long futures and short cash. It is vice versa for long futures and short cash. Are you understanding it or not? Vice versa for long futures and short cash. Point number 5. Thus, a loss in one market gets compensated through. Thus, a loss in one market gets compensated through what? Gain in other market. Thus, a loss in one market gets compensated through the gain in other market. Gets compensated through the gain in other market, leaving the portfolio stable. Leaving the portfolio stable. Leaving the portfolio stable. Leaving the portfolio stable. Everybody, yes or no? If portfolio is unstable, have deviation, it is what? Risky. Stable means what? No risk. Leaving the portfolio stable. Up to this, everybody, are you following or not? Next, point number 6. Point number 6. A TCS cash market position, a TCS cash market position should be hedged using a TCS cash market position should be hedged using what? TCS futures. A TCS cash market position should be hedged using TCS futures. Should be hedged using TCS futures. Because TCS futures price is closely correlated to TCS futures price is closely correlated to what? TCS share price. Because TCS futures price is closely correlated to the TCS share price. Is closely correlated to the TCS share price. Are you understanding this or not? No. Point number 7. However, not all the shares listed in stock exchange. However, not all the shares listed in stock exchange. Has futures contract. However, not all the shares listed in stock exchange has futures contract in futures exchange. Not all the shares listed in stock exchange has futures contract in futures exchange. Full stop. Then, how to hedge those shares? Then how to hedge those shares? Question mark. Then how to hedge those shares? Question mark. Are you finding the question or not? No. Answer is hedge using. Hedge using. Tell me, hedge using what? Index futures. Hedge using index futures. Answer is what? Hedge using index futures. Can I proceed? Point number 6 or 7? 8. Point number 8. Index movement and the share price movement, index movement and the share price movement are not correlated. Index movement and share price movement are not correlated. How the Nifty moves, same way MTH share need not move. Yes or no? Index movement and share price movement are not correlated. Then how we can hedge using? Index futures. Then how we can hedge using index futures? You understand my question or not? Question mark. Tell me how we can hedge here. Write down. Beta links the share price movement with the index movement. Beta links the share price movement with the index movement. Beta links the share price movement with the index movement. For example, beta is equal to 2 times. For example, beta is equal to 2 times means, tell me what it means. When index moves by 1%, beta is equal to 2 times means when index moves by 1%, the share price moves by how much percentage? 2%. When index moves by 1%, the share price moves by 2%. Using this beta, we can take appropriate position in index futures. We can take appropriate position in index futures to hedge the share prices. We can take appropriate position in index futures to hedge the share prices. Everybody, are you following or not? This is called what? Beta hedging. This is called beta hedging or index hedging. This is called beta hedging or index hedging. This is called beta hedging or index hedging. Everybody yes or no? Now, how it is really done can be seen through the problem. Have you understood the broad concept or not? Now, up to this we have discussed. Few more issues are there to be discussed. We discuss along with the problems in this regard. Can I start the hedging through futures problem or not? Now, problems are going to be very much similar to arbitrage problem only, and we should be doing it fast. Can I start or not? Now, please. Stop talking, please. Shh. Take question number 25. Please stop talking. Take question number 25. Shh. Now, Hari buys Can I start? Say, don't talk. I am also standing here from 10:15. I am also in class. Another 1 hour 15 minutes left. We have to what? Complete almost the futures hedging. Now, keep quiet. Don't sleep. Can I proceed? Now, Hari buys 1,000 shares of HPCL at 190. Those share prices, don't go deep into it. All those are old share prices. Can I proceed? Now, Hari buys 1,000 shares of HPCL at 190 and obtains a complete hedge by shorting 300 Nifties at 972. He closes out his position at closing price of the next day. At this point, HPCL has dropped by 5% and Nifty by 4%. What is the overall profit or loss on this set of transaction is a question that is being asked. Can I start or not? Now, tell me. Today, Hari is having position in one market or two markets? Can you tell me what are the two markets? Cash market, futures market. In cash market, Hari has purchased, sold, purchased. Purchased what company share? HPCL share. How many shares? 1,000 shares. At what price? 190. Say, today itself he went to what market? Futures market. He purchased, sold, sold. Sold HPCL and Nifty, Nifty. How many Nifties? 300 Nifties. At what price? 972. Now, he is there in both the markets for 1 day. How many days? 1 day. Tomorrow, he closes his cash market portion by what? Selling the share, and closes the futures market by what? Buying the futures. Because in both markets, anytime I can enter, anytime I can exit. Both are open markets, liquid markets. Everybody, are you following what I am saying? Now, tomorrow, when he decides to come out of both the markets, what happened to the prices? Drop. The price has what? Dropped. How much cash market price drop? 5%. How much the market price drop? 4%. Cash market price drop by 5% not. He'll be crying or laughing? Crying. But who is there to save him? Futures market. We are going to have our counter buy that at a lower price. Now, they're asking you what is the overall profit or loss on the set of transactions. It's a question. Can I start or not? Now, ரொம்ப simple. One line answer. Please, don't talk. Tell me the question number 25. Question number 25. Please, don't talk. Shh. Okay. Branch it into two. He is having legs in how many markets? Two markets. One is what? Cash market. Another is what? If you don't like it, having hands in what? Two markets. Cash market and what? Futures market. Both are same. Okay, now, can I proceed now? Answer my question. Today in cash market, he has purchased or sold. He is having what position? Buy position. Of how much? 190. He bought a HPCL share. How much base here? 190. In futures market, he has bought Nifty, sold Nifty, sold Nifty, having what position here? Sell position. How much rupees? 972. Don't compare this because the shares is 1000, Nifty is only what? 300. It need not be compared. Overall, it will be hedging. Yes or no? No. Next is, tomorrow I am coming out of what? Both the markets together. Okay. In that case, what happens to the share market? I am going to buy or sell? Sell. Is the share price still 190? Increase or decrease? Decrease. It has dropped by how much percent? 5%. I don't want to write the calculation. Calculator take it. 190 into 95%. Kadama, what is the number here? 190 into 95%. What is the number? 180.5. Now tell me, he is having a profit or loss? Loss. What is the loss he is having? 9.5. 9.5 per what? Share. In the how many shares he having? 1000 shares. His loss is how much rupees? 9,500. Respond yes or no. The loss in cash market is 9,500. He is crying for 9,500. Yes or no? His margin account will be getting credited or debited or credited. He is making gain there. Yes or no? In that case, futures buy, sell will be given what? A counter buy. I give a counter buy at the tomorrow's futures price. The Nifty futures price tomorrow increase or decrease? Decrease. Decrease how much percent? 4%. Tell me 972 into 96%. Tell me the number. What the number? 970? 923.33, yeah? 933.12. Yes or no? I am having a profit or loss? What the profit here? 38.88 profit for one Nifty. I have just shorted how many Nifties here? 300 Nifties. My margin will be getting how much profit here? 11,664 is what? Gain. I made a gain of 11,664. I had a loss of what? 9 in other market. Overall, my transaction having gain of how much rupees here? 2,164. The gain is 2,164. Overall gain is 2,164. Stop writing. Calculation part. Everybody understood or not? No. I am happy or unhappy? I am happy, but the hedging is not perfect. Hedging is perfect only when it is going to be zero. So no, the gain should offset the last year. Now you may be happy. Next time may give me minus 2,164 also. May be what? Unhappy. Now, one thing is hedging is not perfect. Now, I'll say, unlike other hedgings like forward, etc., futures hedging rarely is perfect. Is rarely what? Perfect. I'll tell you the reasons why futures hedging will mostly be only what? Imperfect. I'll tell you the reason and still tell you why people go for what? Futures hedging. Can I proceed? No, ரொம்ப simple. Yeah? Gain I make in futures market and loss I make in what? Cash market or vice versa need not or mostly will not offset against each other. I'll tell you the reason here. Number one, TCS share price and TCS futures price will move together. I don't deny it. When TCS share price increases, the future price also what? Increases. Decreases, that also what? Decreases. Understand that they'll mostly move together. They may always not move together. And this is a different market. That's a different market. It's not. Person trading in futures market may have a different information about what? The TCS track on the future day compared to this person. It's not now. Anga buy order, sell order, and this buy order, sell order is what? Different. Just because the share market crashed by 5%, the futures market need not crash by what? 5%. You may crash by what? 6% or what? 4%. It may be possible. The price are generally correlated, but need not be always what? Perfectly correlated because both market operates independently. ரொம்ப simple. A price in BSE and NSE itself is not same. I showed you on that day the TCS share price or not? No. Both are what? Different market. ரொம்ப simple. A onion price in Coimbatore and onion price in what? Mailapur need not be same. Same onion only. Yes or no? Both are what? Different price markets. Yes or no? Now, so when I hedge using futures, gain and loss will offset. The offsetting need not be what? Exact. Because the futures market price movement need not be ditto, same as what the cash market price movement is the first reason, obvious reason. Second reason is, futures market, I can take position only in lot sizes, not in individual amount. Yes or no? Cash market, I may be holding 680 shares. In futures, I have to either go for what? Multiples are 250. You can either be what? 750 or what? 500. No. So, I have to hedge the 680 shares long portion with what? 750 or what? 500 short portion in TCS future. In that case, due to lot size also, futures hedging may not be what? Perfect. Because of what? Standardized lot sizes. Everybody understand what I am saying? Now, third is, where futures is not there, the contract is not there, I hedge using what? Nifty. In that case, beta is an approximation only based on past trend. How I calculate beta using recursive equation? Not using past trend. I believe that when the index changes by 1%, my price goes up by what? 2%. It should be always true. Beta need not be always true, because beta is an approximation of what? The past trend. It is not a God which always sets the trend. Are you understand what I am saying? In that case, the beta hedging also may prove to be what? False. All those makes futures hedging less efficient than other hedging strategies. Are you following? So, the gain or loss need not be what? Same. There's going to be a hedge efficiency calculated. If fraud is equal to loss means what? Hedge efficiency is 100%. Otherwise, the efficiency is what? Less than that. Following what I'm saying? So, in that case, is futures hedging perfect or imperfect? Tell me the reasons why it should be imperfect. Number one, cash market prices and futures market prices are not perfectly correlated. Yes or no? Second is, cash market, I am allowed to trade in any lot. Futures may having what? A standardized lot size. Due to the mismatch of the lot size, also hedging can be what? Imperfect. Shares not having futures contract or depend only on what? Beta hedging. Beta is only approximation of the trend. It's not what? The indicator of a particular trend always. It can also prove to be what? Wrong. Hence futures can be what? Less effective. Yes or no? But still people go for what? Future hedging, because it is very cheap. It is what? Very cheap. When I go to a bank for a forward contract of a currency, they ask me some charges. Yes or no? Some margin will be asking you, so many charges are asked in case of a bank, they'll be having spread etc. When you go for a currency futures, no spread that, no bid rate, no offer rate, only one rate. Are you following what I'm saying? In that case, no spread, no bankers charges. It is generally a market which is very cheap to hedge compared to what? All the other. Option market, pay what? Premium. Normal market, you have to pay some amount toward the person who is dealing with it. Futures, both of us are what? Doing an auction where no spread is there. Are you understand what I'm saying? Now, when you go for a forward hedging for a dollar currency, and when you go for a forward buy, I buy at what rate? Offer rate, and sell at what rate? Bid rate. So, when they quote me the bid rate and offer rate, they include spread and quote me. So, same problem will not arise in what? Currency futures where I have only a single rate to deal with, no bid, no offer, because we both are what? Doing an auction and determining the price. Now, in that case, futures market, in spite of its imperfection, is very, very widely used hedging strategies by hedge funds and what? Mutual funds, because it is what? Cost effective, having very low cost, brokerage is very less, margin money is not so prohibited. Even anybody follow what I am saying? That is why futures is one of the most popular hedging strategies. Can I proceed further? Now, so I want to discuss few more points now. One point has now been discussed. Why the hedging is not perfect? Now, write down. Next. Is the above hedging perfect? Write down. Have you finished writing this or not? You not copied. Copy this quickly. I thought you were writing along with me. Now, write down cash market, futures market quickly. Can I switch on the ACR? Yes. Those who are not copy, raise your hand. Please quickly. Others don't talk. Please, those are copied, shut your mouth. Those are not copied, raise your hand. Okay. Two organs, two different work. Okay, please. Finish copying up, write down notes. Point number 1. The above hedging is not perfect. Point number 1. The above hedging is not perfect. The above hedging is not perfect because the loss is not offsetted by the gain exactly. Because the loss is not offset by the gain exactly. Because the loss is not offset by the gain exactly. The loss is not offset by the gain exactly. Point number 1 or 2? 2. Futures market hedging is rarely perfect. Futures market hedging is rarely perfect. Futures market hedging is rarely perfect due to following reasons. Futures market hedging is rarely perfect due to following reasons. Due to following reasons. A. The cash market price movement. The cash market price movement and futures price movement, the cash market price movement and futures price movement are always not perfectly correlated. The cash market price movement and futures price movement are not always perfectly correlated. Are not always perfectly correlated. That is, cash market may drop by 5%. That is, cash market may drop by 5% and futures market by what? 4%. Cash market may drop by 5% and futures market by 4%. And futures market by 4%. Up to this point number 1. Are you understanding or not? Next, point A or B? B. In futures market, we have to trade in. In futures market, we have to trade in standardized lots. In futures market, we have to trade in standardized lots. Standardized lots. For example, in the futures market, we have to trade in standardized lots. For example, I may be long. Long means what? Buy portion. I may be long 650 TCS shares. I may be long 650 TCS shares in cash market. I may be long 650 TCS shares in cash market, but I can sell either 500, but I can sell either 500 or what? 750. I can sell either 500 or 750 TCS futures. I can sell either 500 or 750 TCS futures because the lot size is 250 shares. Because the lot size is 250 shares. Because the lot size is 250 shares. Are you following the second point or not? So, I am hedging 650 shares by what? 500 or 750 futures. Obviously, hedging should be what? Imperfect. Okay, point C. When we use beta hedging, It is mostly imperfect because when we use beta hedging, it is mostly imperfect because beta is the regression of the past prices, because beta is the regression of past prices which may not hold true. Beta is regression of past prices which may not hold true in future. Beta is regression of past prices which may not hold true in future. Everybody, are you understanding it or not? So 3 points make what? The beta hedging or the futures hedging imperfect. Last point, 3 or 4? Point number 3. Still, futures hedging is popular because it is cost effective. Futures hedging is popular because it is cost effective. Now I want an answer. Up to this, are you following or not? Now, the sum may be small, again I say, but with this sum, I just indicate about what? Imperfection in hedging. That should be understood. Can I was it? Now let's take the next question. Take question number 26. Take question number 26. Very easy sum. We are going to do it together. Don't wait for me to complete. Take question number 26. I will not wait. Can I was it? Now. Shh. Stop talking, please. Hari bought. Please don't talk. Hari bought 1000 shares of HPCL at 210. Please. Obtains a complete hedge by shorting 200 Nifties at 1078 each. All of you. He closes out a position at a closing price next day. At this point, HPCL increased by what? 2% and decreased by 1%. What the difference between 25th and 26th sum? 25th sum, the prices has crashed next day. Now the price has what? Increased next day. That's all. Everybody, can we start or not? Now, 1 minute answer. Can you proceed? Now, tell me, Hari is having positions in how many markets? 2 markets. Write along with me. Branch it into 2. Everybody stop talking. Start writing. Tell me, what the first branch? Cash market. And second branch is what? Futures market. Please. Shh. Cash market. Hari has purchased a share, sold the share, purchased. He is having what position? Buy position. One can call it also long position. Yes or no? He has bought the HPCL share at how much rupees? 210 rupees. In futures market, Hari has sold futures, bought futures, sold futures. He has sold Nifty futures for how much rupees? 1078. Number right? Now, 1078. Now, tomorrow, Hari comes out of both markets. He sells the HPCL share in the cash market. When he is selling the share price has increased or decreased? Increased or decreased? Increased. By how much percent? 2%. So tell me 210 into 1 or 2%. Somebody tell me the number. How much number? 214.20. 214.20. He is very happy or not? Yes. Yesterday he bought at lower price. Today he is selling at what? Higher price. He made a profit of how much rupees here? 4.20 for every share. In how many shares? 1000 shares. The profit made by him is how much rupees here? 4,200. Yes or no? No. His happiness is what? Short-lived, because he is also having the hands in what? Futures market. Where is going to give a counter? Buy. When he gives a counter buy, the futures prices decrease or increase. By how much percent? 1%. 1078 into 101% gives you how much rupees? 1088.78. 1088.78. Now tell me, he is making a loss again or loss? What is the loss for every Nifty? 10 point is loss for every Nifty. Into how many Nifty is here? 200 Nifty. Tell me the last amount. 2,156. Loss is what? 2,156. His overall gain is going to be how much base here? 2,000. The overall gain made by Hari in both the markets together is how much? 2,044. The overall gain is 2,044. That's a primary assumption to understand the loss or gain. Now, earlier the loss is stopped. Here the gain is not stopped. I am creating some stability to my portfolio through the futures hedging, if not perfect. Everybody, are you understanding it or not? Now, take the next question. Mark it as important. Take question number 28. I'll come to 27 in the last. Take question number 28. Take question number 28. Please, don't talk. Take question number 28. Please. Shyam adopts a position of rupees 1 million. 1 million means what? 10 lakh. 10 lakhs long MTNL on 5th June and plans to hold the position till 25th. Please. He intends to protect himself through futures hedging. The beta of MTNL security is 1.2. On 5th June, Nifty futures is trading at 1000. On June 25, Nifty crashed due to instability in the government and became 900. Price of MTNL also dropped, resulting in a loss to Shyam in his cash market to the extent of 1,20,000. So how the futures hedging has reduced the cash market loss is the question has been asked. Now we are going to hedge using MTNL futures, index futures, index future. We call it as a beta hedging, a very simple concept only. Now please read the question before I start with the solution. Please. Can I start now? Now. Question number 28. Question number 28. Please don't talk. Now, I'll do it roughly and we'll do it together. Okay? Now, first let us see how it should be done. Point number 1. Let us see what is the position of Shyam in the cash market. Cash market is holding asset, selling asset, holding. He is having a long position. He is having asset worth how much? 10 lakhs. That is, he is having some MTNL shares. I don't know number of shares. It is worth how much rupees here? 10 lakhs. So the market value of his cash position is how much here? 10 lakhs. Long he is having on what shares? MTNL share. Yes or no? Now, see. Cash market position is rupees 10 lakhs. Rupees 10 lakhs of what? MTNL shares. On which date? 5th June. On 5th June. This is his cash market position. Everybody yes or no? No. What he is worried about is this 10 lakhs may become 8 lakhs or 7 lakhs worth portfolio if the MTNL share price crashes. Correct? Tomorrow the MTNL share is falling means his wealth will not be 10 lakhs. The portfolio value what? Decrease. So he wants to protect himself from what? The crash in the MTNL share price. Hence he goes to what market? Futures market. There he saw MTNL contract. No MTNL contract. No MTNL. He saw what contract? Nifty futures contract. So what contract? Nifty futures contract. Everybody yes or no? Now see. Listen here, this is the only new point to be discussed. Carefully follow remaining of routine. Okay, now, how much value should you enter into futures market is the issue. Remember, it depends on the beta. It depends on what? Beta. What is beta of MTNL? That means when the index moves by 1%, MTNL moves by what? 1.2%. Index crashes by 1%, MTNL crashes by how much percent? 12%. Sorry, index crashes by 10%, MTNL by how much percent? 12%. Index goes up by 20%, MTNL by what? 30. 24%. Everybody yes or no, some number. Yeah, can I say? So 1.2 times is a volatility. Yes or no? No. That means I should not take a contract value for 10 lakhs. I should take a contract value for 12 lakhs. Beta times the cash value. Are you following us? The reason is, when I take a 12 lakhs futures market position, when the futures drops by 10%, the 12 lakh, the loss is 1 lakh 20. Yes or no? But here, it will drop by what? 12%. The same 1 lakh 20 will be there. Yes or no? Now, if I take the same 10 lakhs there, if I take what? Same 10 lakhs there. For example, 10% crashing happens. 10% what? Crashing happens. That 10 lakhs, like 10% how much here? 1 lakh. I'm going to gain 1 lakh. I'm going to gain what? 1 lakh through a counter futures buy. What happens is, here it will not be 10, it will be how much percentage? 12%. The loss will be what? 12% of 10 lakhs is what? 1 lakh 20. I cannot counter a 1 lakh 20 loss with what? 1 lakh. I will be having gain there 1 lakh 20. So no, in that case, how can I make 1 lakh 20 gain? Increase the contract size from 10 lakhs to what? 12 lakhs. I will be having an equivalent what? Futures contract to tackle my cash market portion. Everybody yes or no? Formula is very simple. What is futures market value? Futures market contract value should be what? Beta times the cash market value. Simple formula. Are you following what I am saying? Shall I proceed further? Now, look at this. Now, point number 2 is, now I am going to take what? Futures market. Future market value should be what? Beta times the cash market value. Yes or no? With this, what is beta? 1.2 into 10 lakhs. How much it is here? 12 lakhs. That means, what I should do? I'm having what? Long. I'm doing what? Short. So what I should do? I should sell Nifty futures. I sell what? Nifty futures. What? How much here? 12 lakhs. I shall Nifty futures worth what? 12 lakhs. Is the next point. Everybody yes or no? No. So when I'm long 10 lakhs here, I do want a short 12 lakhs here for the beta to be tackled. Everybody yes or no? No. Next point number 3. Now, I should sell Nifty future with what? 12 lakhs. Now, how many futures? Question arises now. Now, next is number of Nifties. Number of what? Nifties. Now, I should sell what? How much? 12 lakhs. In the futures market, look at the problem and tell me, every Nifty is what? How much? 1200. 1200 is a spot Nifty or futures Nifty? 1000? Correct answer. 1000. I'll check it here. Okay. How much here? 1000. Okay. Now, 12 lakhs is the total value of sale. Okay, I should sell how much Nifty is here? 12 lakh Nifty. Every Nifty worth how much? 1000. Tell me how many Nifties? 1000? I should sell 1200 Nifty futures. 1200 Nifty futures. My question is, this 1000 is spot Nifty or futures Nifty? Adan get that. Spot or futures are? Very simple, yeah. This is a futures selling value. So no, futures market selling value should be divided by futures market price, not the spot market price. So no, rumba simple, yeah. I am going to sell 12 lakh rupees worth of fish. So no, I am going to sell how much fish here? 12 lakh rupees worth of fish. I am going to sell. I will divide it by onion price. Then what price? Fish price. So no, now. I am going to sell in cash market, a futures market, I should divide it by spot Nifty, a futures Nifty, Spot has got nothing to do with it. Today, 25th June, 5th June, I have a Nifty quoted in spot market as well as what? Futures market. Spot Nifty is the price today. Futures Nifty is what? Also what? Price today for a future date. Yes or no? No. I should not divide by the spot price. I divide by what? Futures price, because I am playing position in what market? Futures market. This price only creates me the contracts. Yeah. Yes or no? You understand not? So that means, now tell me, I am going to sell how many Nifties? 1200 Nifties. The Nifty market or futures market deals in Nifties or Nifty contracts or Nifty contract. One contract consists of how many Nifties? 100 Nifties. Up 1200 Nifty, how many contracts here? 12 contracts. Everybody, yes or no? Now let me define the strategy. The strategy is, what is my strategy here? What is his strategy? Sell 12 Nifty futures contracts at how much? 1000. Sell 12 Nifty futures contract what? 1000. So I have taken how much portion? 12 lakh portion in what? The futures market. Everybody is on. Now, next is on maturity date. That is on which date here? 25th June. I came out or not? Now, on the day, let us see what is happening. On what date? 25th June. I have taken position in how many markets? 2 markets. One is what? Cash. Another is what? Futures. They did not ask me to calculate the set. In cash market, I have suffered a loss. I have suffered a loss. How much rupees? 1,20,000. I need not calculate. Number has been what? Given. The 10 lakhs portfolio become what? 8,80,000. Suffered loss of how much? 1,20,000. In futures, now I have taken what future? Sell future for how much here? 1,000. They said Nifty crash. Nifty what? Crash. How much here? 900 and? Crash to 900. I give a counter buy at what? 900. For every Nifty, I made a profit per Nifty. How much here? 100. Into how many Nifties? 100 Nifties. Into how many contracts? 12 contracts. Gives how much here? 1,20,000. This gain and loss offsets what? Each other is the answer. Everybody following or not? Yes or no? No. This need not be exact. Again I say, the question gave me what? 1,20,000. Coincidentally, the offsetting is what? Exact in this particular case. Everybody understood or not? Now, in the sum, only one thing newly learned. When it heads through index future, what should be the futures market value? You should take question here. Beta times the cash market value. That's all. Answer is over. Everybody following or not? Now, write down the solution. Take question number 28. Write question number 28. Point number 1. I'll dictate the solution, right? As I dictate the wordings and all. Can I proceed? Now, point number 1. Question 28, point number 1. Write down. Cash market position. Put a hyphen and write. Point number 1. Cash market position. Put a hyphen and write. Long rupees 10 lakhs worth MTNL share. Long rupees 10 lakhs worth MTNL share. Long rupees 10 lakhs worth MTNL share. Rupees 10 lakhs worth MTNL share. Can I proceed? Point number 2. Futures market value. Futures market value. Underline that. Futures market value is equal to fill in the blank, beta times cash market value. Futures market value is equal to beta times cash market value, which is equal to 1.2 into 10 lakhs. 1.2 into 10 lakhs is equal to what? 12 lakhs. 1.2 into 10 lakhs is equal to 12 lakhs. Can I proceed or not? Write down next. Or same point, right? Hence, sell Nifty futures worth. Hence, sell Nifty futures worth how much lakhs? 12 lakhs. Hence, sell Nifty futures worth 12 lakhs. Hence, sell Nifty futures worth 12 lakhs. Can I proceed or not? Point number 3. Point number 3. Number of Nifty contracts. Point number 3. Number of Nifty contracts. Underline that. Number of Nifty contracts. Underline that. Right? Number of Nifties is equal to. Number of Nifties is equal to 12 lakhs divided by 12 lakhs is what market? Cash market or futures market or future. I have to sell 12 lakhs futures or not? 12 lakhs divided by 1000 is what price? Futures price. 12 lakhs divided by 1000. 12 lakhs divided by 1000. 12 lakhs divided by 1000. Is equal to how many nifties? 1200 nifty futures. Is equal to 1200 nifty futures. 1200 nifty futures. Next line. Since a nifty future contract has 100 nifties, since a nifty future contract has 100 nifties, since a nifty future contract has 100 nifties, the number of contracts is how many contracts? 12 contracts. The number of contracts is 12 contracts. The number of contracts is 12 contracts. Everybody, yes or no? No. Point number 3 or 4? 4. The hedging strategy is short 12 nifty futures contracts. The hedging strategy is short 12 nifty futures contract at rupees 1000. The hedging strategy is short 12 nifty futures contract at rupees 1000. Short 12 nifty futures contract at rupees 1000. Everybody understanding it or not? Now, next point number 5. Point number 5. On 25th June. Point number 5. On 25th June. Branch it into 2. On 25th June, branch it into 2. Cash market, futures market. Cash market, futures market. Cash market, answer me, profit or loss? Loss, 1,20,000. Cash market, loss, 1,20,000. Futures market, sell, I sold how much futures? 1000. Sell futures worth 1000, other contract price. I close it by giving a counter buy. Buy at what? 900. The question has given you that it has crashed to 900. Buy at 900. Profit is equal to how much the profit per nifty? 100 into 1 nifty 100. Every contract, how many nifties here? 100 nifties. 100 into 100 nifties into how many contracts? 12 contracts. Now 100 per nifty, a contract has got 100 nifty. There are so many contracts, 12 contracts. Is equal to how much rupees? 1,20,000. Is equal to 1,20,000. The portfolio is perfectly hedged. 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 Okay. Now, take question number 29. Half an hour solidly left. I have to do at least 2 problems minimum. Take question number 29. Please. Shh. Shall I proceed now? This sum is going to be similar to the last sum. That's a practice type of problem to get the grip. Can I proceed? Now, nothing to teach, only to solve. Can you start or not, please? Shh. Ravi bought 5,000 shares of Reliance. Please stop talking. Please. Shh. Ravi bought 5,000 shares of Reliance at 200 rupees per share on 29th September. He wants to hold this investment till 31st December. The beta of Reliance is, say, not minus 1.2, 1.2, that is hyphen. Okay, it is not minus, make it as what? 1.2. If you have a doubt, beta of Reliance is 1.2. He wants to hedge his market exposure by selling Nifty. Please. Future Nifty futures contract, that full stop is wrong. Nifty futures contract, it is available at 1,200 at the moment. What is 1,200? Spot Nifty, yeah? Futures Nifty, yeah? Futures Nifty. Nifty futures is available how much base? 1,200. Now, let us find out how he can hedge his position and work out profit or loss of Ravi in the above situation, in these situations. 31st December, suppose Nifty rises to 1250, Reliance Strong to 230. Suppose Nifty goes down to 1150 and Reliance has to 185. Is a question that is asked. Everybody, can we start or not? Right on. First, same steps. Let's do it together. Step 1 or point number 1. Shall I start up? No, please, don't talk. Tell me the question number 29. Question number 29. Please, write down point number 1. Cash market position. Please write cash market position. Cash market position. Ravi has bought Reliance shares, sold Reliance shares. How many shares? 5,000 shares. At what price? 200. Write down. Long Reliance shares. Long Reliance shares worth. Long Reliance shares worth. In bracket write 5,000 into 200. Long Reliance shares worth. Bracket write 5,000 into 200. How much rupees here? 10 lakhs. Long Reliance shares worth 10 lakhs. Long Reliance shares worth 10 lakhs. I am dictating the answer just for control writing here. Can I put or not? Now, next. Futures market value. Next, right? Futures market value. We all know the formula. What is futures market value? Beta times the cash market value. Write down. Futures market value is equal to beta times the cash market value. The contract value in futures market should be what? Beta times the cash market value. What is beta? 1.2 into 10 lakhs. Is how much lakhs here? 12 lakhs. Futures market value is 12 lakhs. Right below that, Ravi should sell Nifty futures worth. Right answer. Ravi should sell Nifty futures worth how much here? 12 lakhs. Ravi should sell Nifty futures worth 10 lakhs. 12 lakhs. Ravi should sell Nifty futures worth 12 lakhs. Everybody understanding it or not? Now, next point number 2 or 3 here? 3. Number of contracts. Number of contracts. Number of contracts. Is that right? Number of Nifties. Number of Nifties. How much what Nifty should I sell in futures market? 12 lakh. Look at the workbook and tell me today a Nifty futures how much rupees? 1,200. That means how many Nifties are there here? 1,000 Nifties. 1,000 Nifties. Now, one contract, how many Nifties here? 100 Nifties. Right now, since one contract is 100 Nifties, since one contract is 100 Nifties, one contract is 100 Nifties, Ravi should short. Ravi should short. Ravi should short. How many Nifty contracts? 10 Nifty contracts. Ravi should short 10 Nifty contracts. Ravi should sell 10 Nifty contracts. Other meaning, Ravi should sell 10 Nifty contracts. Everybody, yes or no? Now, point number 3 or 4? 4. Hedging strategy. Let us defining it. That's our consolidating, okay? Hedging strategy. Sell 10 Nifty contracts. Hedging strategy. Sell 10 Nifty futures contracts. Sell 10 Nifty futures contracts at, please, how much? 1,200. Sell 10 Nifty futures contract at 1,200. Is a hedging strategy. Respond, yes or no? Now, point number 4 or 5? 5. On maturity date. On maturity date, I think they given us what? December? On December 31st. On December 31st. On December 31st. Okay, now 31st December, bracket right, situation 1. There are two situations given, no, situation 1. Branch it into 2. I am in how many markets? 2 markets. First is what? Cash, and second is futures. Cash market and then futures market. Cash market, tell me, I am now having a long or short or long. Having what position? Buy position. I bought the Reliance shares at how much rupees here? 200. Buy position at how much rupees? 200. In futures market, I have what? Sold. I have a sell nifty future at how much rupees? 1200. Sell nifty futures at 1200. Cash market on the date, I will be closing by what? Selling. When I went to sell, tell me part A, what happened to the share price? Increase or decrease or increase? Reliance increased how much rupees? 230. It increased to 230. I made a profit or loss? Profit. How much profit per share? 30. Into how many shares? 5,000. Gives you a profit of 1,50,000. 30 into 5,000 gives you 1,50,000. Now, sell. Sell is given what? A counter buy. I give a counter buy. The Nifty closed at how much here? Tell me what the Nifty futures price. It closed to 1,250. It closed to 1,250. I have a profit or loss of loss. What the loss per Nifty? 50. In the how many Nifties per contract? 100 Nifties. In how many contracts? 10 contracts. What the profit here? 50,000. Now the loss is 50,000. Loss is 50,000. Now the overall profit is how much rupees? 1 lakh. The overall profit is 1 lakh. The overall profit is 1 lakh. Are you able to understand the calculations or not? Now, please. Next, point number 5 or 6? 6. Point number 6. On maturity date. Point number 6. On maturity date. That is 31st December, situation 2. Question given, 2 situation 2. I am having my position in cash market as well as what? Futures market. Cash and then futures market. Tell me, cash market, I have bought or sold? I have bought. I am having a buy position of Reliance share for how much rupees? 200. I went for Nifty future sell at how much rupees? 1,200. On December 31, when I came out by giving a sell for Reliance share, I sold the share for how much rupees? 185. 185. Resulting in a profit or loss? Loss. Loss how much rupees? 15 rupees. So how many shares here? 5,000. Tell me the loss amount. 75,000. Futures market, the future sell is given by a counter buy. At how much rupees? 1,150. Let him tell. 1,150. Tell me. Profit or loss? Profit. What the profit here? 50 per Nifty. You know how many Nifties? 100 Nifties. Into how many contracts? 10 contracts. What the profit? 50,000. Tell me, that is the overall loss. The overall loss how much rupees here? 25,000. Good or bad? Good, because without the future, I would have suffered what? 75. Due to future, loss has been mitigated to what? 25. It acts as a brake against the volatility. My volatility is reduced, obviously. Response is so no. Is a solution to question number what? 29. Okay, now I will complete question number 31 and leave you. Just 15 minutes. Take question number 31, please. Don't talk, please. Take question number 31. Then what happens is 30 will take not more than 10 minutes. Okay, I'll leave you after 31. Then the short is very similar to opposite to long only. Will not take another half an hour. And the 7 will take 10 minutes. Another 1 hour or so will be completing the next class, the chapter future, and start with the interest and risk management. Now, so come here. Take question number 31, please. Mark it as very important. Mark it as what? Very important. Good problem. Similar type is once again asked in the exam. Please. say, don't be in the leaving mood. Last problem, concentrate hard. I will not take more than the promised time. Please believe me. Peacefully attend. Can I proceed now? A portfolio manager owns 3 stocks. 1, 2, 3. Share owned 1 lakh, 2 lakhs, 3 lakhs. Share price today given, beta given. Spot Nifty 1350, futures price 1352. To use stock index futures to decrease the portfolio beta to 0.8, increase the portfolio beta to 1.5 is the question that is being asked. Can you start or not? Now, first of all, in the cash market, don't look at the question. Let us gradually progress into the question as well as solution. Answer me what I ask. In the cash market, I am owning shares. I have sold shares. I am owning shares. I am owning share of one company or 3 companies. That means I am owning what? A portfolio. I am owning what? Portfolio. Now, so I am having a portfolio. Now, tell me, in futures market, I can find a futures contract for a TCS. I can find a futures contract for what? Infosys. I cannot find a futures contract for a portfolio of TCS Infosys because if I hold a portfolio, if I want to hedge my portfolio, I have to hedge only using what? Index or market portfolio. So, index hedging is possible, is the only possibility if I don't have a futures contract for a given share or if I want to hedge my what? Portfolio, then otherwise only stock future hedging is possible. Everybody yes or no? Now, answer me, I should hedge my portfolio using what hedging? Index hedging. Yes or no? Now, that means futures market value is equal to, we have a formula, what formula? Cash beta times what? Cash market value. Now my beta is beta of stock 1, stock 2, stock 3. It is what beta? Portfolio beta. Long ago. What is beta of a portfolio? Weighted average beta of the individual securities. First step is to calculate what? Portfolio beta and then proceed further. Everybody, are you following what I am saying? Now, few more interesting adjustments are there. We'll discuss in the later stages. Can I start or not? Right on. First, step 1, calculation of portfolio management fully thorough. More discuss okay, discuss in and out. You should be having a good grip over it. Can I say it? Now, step 1, portfolio beta. Portfolio beta. Have the following columns. First column, security. Tell me the question number. 30. Okay. First column, security. Second column, value. Third column, proportion. Beta, weighted beta. Portfolio, value, proportion, beta, and then what? Weighted beta. What are the securities in a portfolio? 1, 2, 3. When I say value, book value, market value, always real investment is the market value of investment. Explain number of times in dividend policy and other chapters or no? Now, tell me, how many shares, how much rupees? Tell me, first security, how many shares it is? 1 lakh shares of 400. So, how many lakhs here? 400 lakhs. So, value right as 400 lakhs. Second, please multiply and tell me how much lakhs? 600 lakhs, sir? 600 lakhs. Third is what? 300 lakhs. The wealth of my portfolio value is how much here? 1300 lakhs. Portfolio value is 1300 lakhs. Tell me in 3 decimals, always introduce 3 decimals for rounding off. 400 plus by 1300, what is the decimal? 0.308. Proportion is 0.308. 600 by 1300. 0.462. 300 by 1300. 0.230 number. It will be tallying. This is 461. Make it as 461. Make it as 0.231. You don't 0.3231. Don't fight with me. Tell me what is the total here? 1. Total is 1. Please, shh. Tell me the beta 1 by 1. What is beta of security 1? 1 point? Beta of security 2? 1 point? Security 3? 1.3. Okay. Now, proportion to beta gives you what? Weight and beta. Tell me in 3 decimals. What are 3 decimals here? 0.339. 0.339. Next. 0.554. No. 0.553. Accept that. Next. 0.300. No confusion here. When I allow you to calculate, it is not calculation, it is confusion. Please tell me what the total. What the total? 1.192. So this is called as what beta? Portfolio beta 1.192. 1.192. Stop, please. 1.192. See, I have a discussion to make. Once it is over, then the problem can be completed in no time. Please listen here. Now, in cash market, my value is 1300 lakhs. Yes or no? Yes, and my portfolio beta is 1.91 or 1.19. The meaning is, when the index moves by 1%, my portfolio value moves by what? 1.19 is the meaning of that. Yes or no? Now, see. Normally, the formula we wrote is futures market value futures market value is equal to what? Beta times the cash market value. I round off the beta to 2 decimals. Okay, can I say? Now, in that case, what is beta? 1.19 into cash market value is 1300 is the future market value. Yes or no? This is what I call as complete hedging. I call as what hedging? Complete hedging. I tell you what I am trying to do. Very simple here. Now, what is my beta? 1.19. I want my beta to be 0. That means I don't want the portfolio to change. What is hedging? Reducing risk. What is hedging? Reducing risk. My present risk is what? 1.19. I want the risk to reduce, get what? 0. Hence I write 1.19 minus what? 0 into what? 1300 lakhs. If I take this position in what? Futures market, I believe that my hedging is perfect. Futures like hedging imperfect is a different issue that happens later, but this is my motive. Motive is what? I want to fully make it what? Risk free by eliminating the entire 1.19 beta. Now, my current beta is 1.19. I want the beta to be what? 0. Hence, I take an opposite portion of what? 1.19 times the cash market portion to reduce my risk to 0. That's one. Are you following what I am saying? Now, in this problem, I don't want to reduce my risk to 0. I want to reduce my beta from 1.19 to what? 0.8. Okay, I want to reduce from 1.19 to what? 0.8. That means, should I take so much big portion in futures market, lesser portion bigger? I don't want to eliminate my full risk. I want my risk to reduce to what? 0.80. Ennappa, yes or no? Now, that means the answer changes now. In this case, the futures market value is, what is my current beta? 1.19. I want to make it as what? 0.8. I don't want to make it as 0 by hedging fully. I want to make it only what? 0.8 by hedging partially. So no. Now, into what? The cash market value 1300 lakh will reduce my beta from 1.19 to what? 0.8. Everybody, are you following what I am saying? In a partial beta hedging, what hedging? Partial beta hedging, where I don't multiply by the full beta, only by what? Proportional beta to reduce it to the target beta. What I am saying? Now, next. I'll ask another question, then the answer can be completed. See, that means when I want to reduce my beta to 0, what is futures market value? 1.19 times 1300 lakhs. If I take, I will reduce my risk fully, is the assumption. It's not. If I want to reduce my risk to what? 0.8, it is what? 0.29, 0.39 times of what? 1000 only should be what? Hedged. I hedge 0.39 beta, I leave what? 0.80 beta unhedged. What I am saying, that is what we call as what? Partial hedging. Yes or no? Now, using futures market, I need not only reduce my risk, I also what? Increase my risk. It is possible. How means? Next question is, they want you to increase the beta to what? 1.5. In that case, what the current beta? 1.19. I want to make it as what? 1.5 into what? 1300 lakhs. What the difference here? Point? Minus 0.31 into what? 1300 lakhs in the futures market. In that case, how to increase my risk here? I have long in cash. I am long in what? Futures also. If I long in cash, long in future, when the share price increases, both markets I make a gain. Yes or no? When the share price decreases, both markets I make a loss. That means my volatility is further increased. Yes or no? Now, if I take the same position in both the markets, I am increasing my risk because I am not diversifying into what? Opposite position. I take what? Same position. Either a bumper loss or a bumper profit. Either a huge loss or what? A bumper profit can happen. In that case, if I take a same position in what? Both the market, I can increase my risk or not? My 1.19 risk, I want to increase it to what? 1.5. What I can do? I can take 0.31 times what? 1300 lakhs as portion in what? The futures market. What portion? Long or short or long? I am long in cash. I become long in what? Futures also. In that case, I increase my beta to what? 1.19 to 1.5. Are you following what I am saying? Now, say, this is how portfolio managers generally manage their risk. Okay, now we are seeing in portfolio management now, I have a target risk and operate. Yes or no? Now, see, my company is having a portfolio. I am a mutual fund. I am having a portfolio. What how much? 1.19. Suppose I want to increase the risk of the portfolio. Increase what? Risk of the portfolio to what? 1.5. Two options for me. I can search for securities having what? Higher beta, purchase it, put into my portfolio, increase my risk. Yes or no? In that case, the return also will increase. More the risk, more the return. But in that case, the problem for me is when I buy more security, I have to pay brokerage. What I can do is, with the same portfolio, I want to increase my risk and return. Yes or no? So what I can do is, I can just change the risk profile by taking what? Portion in the futures market, the beta times. Are you following what I am saying? Suppose I am having a portfolio of 1.19, my customer says that my utility curve, my what? Utility curve, I am having a portfolio package and you said I am not willing to take more than what? 0.8 risk, but you have a portfolio having what? 1.19 risk. The same portfolio, I can make it for you for what? 0.8 by doing what? A beta hedging. Everybody saw no? So the mutual funds or investments can have a standard package. With a standard package, for your risk profile, they can what? Increase up and down by taking positions in what? Futures market. This is called as what? Risk management using what? Futures. Are you following what I am saying? You can either reduce it or what? Increase it based on your convenience without a brokerage. Are you following what I am saying? Are you following? This is what is the main theme behind the solution to this particular problem. Now, two questions. How to reduce this to 0.8. How to increase it to what? 1.5. Both have been answered now. Enough answer. Can you proceed or not? Now, let us do it in 2 minutes. Notes will be given in the next class. Okay. Now, 1.192 calculator or not? Next. Write down. Next. Step number 2. Right? Step 2. Strategy to reduce. Step 2, strategy to reduce portfolio beta 2. Strategy to reduce portfolio beta to what? 0.8. So my current beta is 1.19. The target is what? 0.8. So much should be reduced. Okay. Strategy to reduce portfolio beta to 0.8. Strategy to reduce portfolio beta to 0.8. Everybody, can we start on that? In that right? Point number 1. Cash market position. Point number 1, cash market position. Tell me, what is cash market position? Long portfolio worth. Cash market position, long portfolio worth. How many lakhs? 1300 lakhs. Cash market position, long portfolio worth 1300 lakhs. Next, point number 2. Tell me, what is point number 2? Futures market value. No change in step. Point number 2 is what? Futures market value. By the formula, futures market value is equal to, bracket, right? Beta minus target beta. Futures market value is equal to beta minus target beta. Earlier my beta was 1.19, my target beta is what? 0. Hence I use simply beta. So no, beta minus target beta into what? Cash market value. Beta minus target beta into cash market value. My beta is what? 1.9. I want to make it as 0.8 into what the cash market value? 1300 lakhs. 1.19 minus 0.8 into 1300 lakhs. What number sollupa? What number? 1% 5? 507 lakhs. 507 lakhs. We should sell futures worth. Write down. We should sell futures worth. Sell apa? No, sell not. I am long, not. We should what? Sell futures. Okay. We should sell futures worth. How much lakhs? 507 lakhs. We should sell futures worth 507 lakhs to reduce the beta to 0.8. We should sell futures worth 507 lakhs to reduce the beta to 0.8. To reduce the beta to 0.8. To reduce the beta to 0.8. Everybody understanding it or not? Now, point number 2 or 3 or 4 or? Point number 3. Number of futures contracts. What's happening? Number of futures contracts. Number of futures contracts. Please. This is what Nifty above? Okay. Now, let us say awake or not. Number of Nifties. How much I want to sell? 507 lakhs. 507 00 000. Whatever. 507 lakhs. Divided by 1 Nifty. What is the price? I want everybody to answer. What is the price of 1 Nifty? 1350 or 1352? 1350 or 1352? 1352. Because this is the futures value. So divided by what? Future price. I am not selling in spot. I am selling in what? Futures market. Is it not? So divided by what? 1352. Tell me then why they are given 1350? To confuse you. Can I proceed? Now tell me the number. What's the number? 37,500 Nifties. 37,500 Nifties. Now, every contract has got how many Nifties? 100 Nifties. Right now, since one contract has 100 Nifties, since one contract has 100 Nifties, since one contract has 100 Nifties, sell how many contracts? 375 Nifty futures contracts. Sell 375 Nifty futures contracts. Sell 375 Nifty futures contract. 375 Nifty futures contract. Last point. Point number 3 or 4 or 4. The hedging strategy is short 375 Nifty futures contract. The hedging strategy is short 375 Nifty futures contract. Short 375 Nifty futures contract at, tell me at how much rupees? 1,352. Short 375 Nifty futures contract at 1,352. Now, this is the answer for step 2. What is step 2 heading here? That is profit is reduced to what? 0.8. Last step 3. Last step 3. Write down step 3. Homework will not understand. Okay, step 3. Last step 3. Increasing the portfolio beta to. Correct. Increasing portfolio beta to 1.5. Increasing portfolio beta to 1.5. Increasing portfolio beta to 1.5. Can I proceed? Point number 1. Cash market position. Cash market position. Long portfolio worth. Cash market position. Long portfolio worth 1,300 lakhs. Long portfolio worth 1,300 lakhs. Next. Point number 2. What is point number 2? Futures market value. Point number 2, futures market value. Formula. Futures market value is equal to Futures market value is equal to what? Beta minus target beta into cash market value. Beta minus target beta into cash market value. What is my current beta? 1.19. I want to increase it to what? 1.50 into how much? 1,300 lakhs is equal to minus 0.31 into 1,300 lakhs. Is it how much here? Minus 403 lakhs. Minus 403 lakhs. The negative indicates that we should take what position? Long position in futures market. The negative indicates that we should take long position in futures market. We should take long position in futures market. The negative means negative hedging. This means negative hedging. This means negative hedging. Hedging means what? Reducing risk. Negative means what? Increasing risk. Okay, increasing risk. This means negative hedging. This means negative hedging. Now, point number 2 or 3? 3. Number of contracts. Number of contracts. Okay. Number of nifties is equal to number of nifty is equal to how much lakhs future contract value? 403,000,000 divided by 1,352. 1,352. Tell me the number. What is the number? What number, per? 29,000? 29,808 nifties. 29,808 nifties. Now, 808 not possible. 800 only is what? Possible. Either 800 or what? 900. Anyhow it is going to be what? Imperfect. Round down to the nearest one to just reduce the imperfection. Can I proceed? Now, number of contracts is equal to 298 contracts. I should divide by 100. Number of contracts is equal to 298 contracts. Number of contracts is equal to 298 contracts. 298 contracts. Last point. Point number 3 or 4? 4. The risk increasing strategy is long. The risk increasing strategy is long 298 nifty futures contracts. The risk increasing strategy is long 298 nifty futures contract. Long 298 nifty futures contract. And how much rupees? 1,352. At 1,352. Tuesday's class will start with another important area called as interest rate risk management.